Welcome to the Keiser Report. I'm Max Keiser. I'm going to be talking with Matt Taibbi later on in the program. And, of course, I've got Keiser Report correspondent Stacy Herbert on hold, ready to go. But first, let's talk about one of the most interesting, quote-unquote, visionaries in the world today, Sheikh Mohammed of Dubai. Yeah, Sheikh Mohammed of Dubai, a really interesting visionary. His vision was to combine rampant real estate speculation with a theme park. That's right, combine these two. The problem is that the vision was actually a nightmare, and that Sheikh Mohammed has become the Dick Fuld of the Middle East. Remember, Dick Fuld was the architect of the Lehman Brothers collapse. Now the Middle East is bereft with all kinds of collapsing debt, including a $3.52 billion quote-unquote Islamic bond due December 14th that it looks like Dubai might play a part in defaulting on. And by the way, in my opinion, those bonds are not compliant with Sharia law, but that's a whole other topic. Now, what should have Sheikh Mohammed done with his many, many billions of dollars if he wanted to combine rampant real estate speculation with the theme park? Well, instead of blowing it in the desert, he could have bought Florida. Yeah, sure. Look, here's my map. It's all pretty easy, actually. If you look here, you see where's Dubai. Oh, yes, Dubai is somewhere around here. And it's only a hop, skip, and a jump over here to Florida.
Max, listen, sorry to interrupt.
Director Stewart, yes.
What about that world development in Dubai?
Well, this is all very interesting. Let's play a little video of that world development in Dubai. They're recreating the entire world in a development, real estate speculation about 2 inches above a line in the water that's going to be underwater thanks to climate change and global warming in a couple of years. Play that against. This is an interesting video of Dubai World, the proposed theme park in Dubai. You can see this. Oh, it looks so engaging and charming and enchanting, doesn't it? Great for the kids. Now let's play a little video from Walt Disneyland Orlando. Look at this. It's almost the exact same video. It's probably the exact same director. It's probably our director.
What?
Well, Sheikh Mohammed looks like he's got a lot to answer for, and it looks like the Middle East is now part of the second phase of the meltdown in the global credit crisis that began 2 years ago, picked up speed a year ago, and looks like it's going to be with us for, 2, 3, 4 more years. Plenty of shoes to drop, plenty of problems yet to be explored. Let's talk with, right now, Stacy Herbert, Keiser Report correspondent, to get the latest. Stacy, what is happening?
Max, well, as we see, the Dubai crisis is really a replay of last year's crisis in the West. We have moral hazard underlies the entire thing because every single article, all of them, and there have been hundreds of them this week about the crash of Dubai, all roads lead to Abu Dhabi. We're all investors, all bankers. Everybody assumes that Abu Dhabi, the wealthy cousin of the Dubai, we're going to bail them out all along. Everybody assumed this. So you have the headlines, fears of double-dip recession grow as Dubai crashes. Dubai woes royal financial markets. West fears fire sale of Dubai assets that will spread across the world. So the entire global infrastructure, again, from a mere between 60 billion and 100 billion, 20 billion in debt, the entire globe last week were terrified that the entire financial system would collapse again because the Sheikh, the Emir of Abu Dhabi, was not stepping up immediately to bail out the Dubai debts.
Well, it's a matter of transparency also. That number that they throw around in the front room of the news organizations that report on this is, as we know now from 2 years of this credit crisis, not really the real number. So whatever number they're talking about now, double, triple, quadruple, it's going to be a lot bigger.
But it's also a reminder that the credit crisis isn't over because the sheer panic, the VIX index, the volatility index, like jumping by over 20%. Everybody is terrified that there are more bad debts out there. And of course, these are not just ordinary people who are terrified. They're people who actually have created these monster bad debts. And they're afraid that their own bad debts are going to be blowing up.
Well, these bad debts, there are really, literally trillions of them yet to be disclosed. Depending on who you talk to, the number is anywhere between 10 to 20 trillion in bad debts that have yet to be disclosed. And we're talking about a deflationary nightmare in the Middle East, in Dubai and Abu Dhabi. I mean, this is just the next chapter, phase 2 of the global credit crunch, and there's a lot more pain to come.
Well, exactly. And this brings me to the next headline, which half of banks' losses may be unknown, IMF chief. So this is Dominic Strauss-Kahn of the International Monetary Fund. This past week, he said, there are still some important losses that have not been unveiled. It's possible that 50% of bank losses are still hidden in their balance sheets. The proportion is greater in Europe than in the United States.
Hidden? I mean, look in the UK, for example. Those banks have been hammered. Royal Bank of Scotland, Barclays, HSBC, their stocks are getting beaten up today because for this very reason. They're not disclosing all the risks that they have on their balance sheets. And where's Gordon Brown? Where's Alistair Darling? Where are the leaders of these countries where these banks reside that are not enforcing the regulatory framework necessary, at least to get minimum disclosure, minimum regulatory adherence? The leaders in these countries, including Obama in the U.S. and Geithner and his crew of, crony capitalists, they're not doing anything to enforce the rules, and they're perpetuating this financial holocaust.
Well, yes, exactly. And we saw that with the day that Dubai announced that they were going to defer payment on their debt for 6 months. We did see that it was the UK in particular that was slammed. Because of the 60 to 120 billion, it's known that the UK has 50 billion of those debts in the Dubai.
Oh my goodness. Here's the debt. Here's the Grim Reaper of debt. He's coming to the UK banks yet again. Look at that, the Grim Reaper of debt coming to the UK banks yet again.
This brings me to the final headline, Max. Lord Miners attacks tin ears of bankers over bonuses. So, as you see, we're moving from the oligarchs of America to the emirs of the UAE to the lords in the UK.
Lords, emirs, and
oligarchs.
Oligarchs. Lords, emirs, and oligarchs. Lords, emirs, and oligarchs. Yes, that's the new world order. It's run by a plutocracy melded with a monarchy, melded with monopolists.
Yes, you see very few so-called capitalists in this equation.
Capitalism is dead.
Well, Lord Miners, he's the regulator for the City of London, he commented last week that Lloyd Blankfein seemed to some to be on a different planet to the rest of humanity, ignoring a year of record losses of dangers and damage. Blankfein, he says, appeared to have lost sight of the impact of the crisis that it had on ordinary people and their anger at perceived personal excesses. So he's talking about Lloyd Blankfein paying record bonus to himself and to his cohorts and calling him and alleging that he's doing God's work by doing so.
Oh, that's right. Lord Blankfein alleges he's doing God's work. The Grim Reaper of debt's coming to you, Lloyd Blankfein. Well, we're going to be talking to Matt Taibbi about this in a few minutes, but before we do, let's just delve on this a little bit more. So Lloyd Blankfein, his company, Goldman Sachs, and the rest of Wall Street and the City of London and these other banking schnooks around the world are paying themselves multi-billion-dollar Christmas bonuses. But yet, unemployment's rising. It's at 17.5% in the U.S. Wages are down. But, 1 in 8 in America are on food stamps. Why don't they give those people Goldman shares stock certificates? They should increase the shares of Goldman stocks by the number of shares it would take to give all those people in America, instead of food coupons, food stamps, they should give them shares in Goldman Sachs. They're the ones who built Goldman Sachs. It's their hard sweat and labor that was participating in the mortgage fraud to begin with that created the share offering of Goldman. They should be getting Goldman stock, not food stamps, Goldman stock.
Well, they would participate in what? Another headline I have, actually. Goldman's secret moral pathology, 15 symptoms of a Wall Street disease destroying democracy and capitalism.
Yeah, let's hear them. Let's hear them. The pathology. These are sick people.
This is Paul J. Farrell in Dow Jones Market Watch. I'll just list you 5 of the symptoms of Goldman's disease destroying democracy and capitalism. Number 1, gross denial of any moral damage caused by their rampant greed.
Gross denial of moral damage. Well, that fits Lloyd Blankfein. And Jamie Dimon, don't forget him over there at J.P. Morgan. We're watching you, Jamie.
Number 2, narcissistic egomaniacs with secret God complexes. I might say that actually Lloyd Blankfein's God complex is quite public.
Yeah, he didn't make a secret of it. He says he thinks he's God, or he's doing God's work. Well, that's one step removed from he's thinking he's God. When he's going to show up to work in sandals and head.
And number 3, paranoid obsessives about secrecy, guilt, and non-disclosure.
Right, he's paranoid. He's paranoid that if anyone finds out how much money they're stealing, they might go to jail, which I think is a good thing to be paranoid of.
And, you know, as you've seen over the last few weeks and last few months since Obama took office, that the banking industry has spent hundreds and hundreds of millions of dollars lobbying to prevent any further regulation, to prevent credit derivatives being traded on an open public exchange. They want these dark pools because they're telling their clients actually dark, opaque pools actually create better pricing for them.
Yeah, exactly. Obama's complicit in this. He put his foot down and didn't allow any new regulations to come to stop the thieving. Obama, the Grim Reaper of debt's coming for you!
Number 4, power-hungry need to control government using Trojan horses, like we see in Dubai or like we saw last year in the United States. So these Trojan horses of giant calamitous disasters if you don't bail us out. You know, the entire financial system is going to collapse. Here it is, save it.
All right, look, Stacy Herbert, Keiser Report correspondent. I want to finish this list as soon as we get back from this break. You're watching the Keiser Report. Be back in a second.
Every month, we give you the future. We help you understand how we'll get there and what tomorrow will bring. The best in science and technology from across Russia and around the world. Join us for Technology Update on RT.
The climate here is harsh, and so is life. But the memory of their ancestral traditions helps them to survive and get the very best from nature. They are at one with the world, though they live where the world ends.
Hi, I'm Max Keiser, and this is the Keiser Report. We're back. We were talking with Keiser Report correspondent Stacy Herbert, her list of pathologies to give a good indication of how sick are these bankers. Now, we went through a few on your list, Stacy. You have, I think, at least one more. Tell us, please.
I do have one more. Borderline personalities who regularly ignore conflicts of interest. Now, Paul Farrell is speaking about the likes of Goldman Sachs, creating subprime mortgage bonds and then shorting them at the same time.
That's a key point, isn't it? So these banks, they create securities that they sell into the market, and they encourage all these people to buy into them, like pension funds and these passive investors who really are not monitoring what they're buying very closely, including the endowment of Harvard University, where Larry Summers apparently blew $1 billion for these neoliberal schnooks.
That's right. And it also, you know, the headline on this story says that it's destroying democracy and capitalism. But these same ingredients are also destroying neo-feudalism and monarchism, as you see in the UAE, with the same conflicts of interest, say, with Sheikh Mohammed of Dubai, owning a lot of these. You know, the wealth of Dubai World was considered his own personal wealth and sometimes the wealth of the investors. And it was very confused about who actually owned what.
Okay, so as a personality type, Sheikh Mohammed is similar to Lloyd Blankfein and Dick Fuld, Jamie Dimon, and the other fallen sinners on Wall Street. And the contagion of banking fraud, let's call it, has spread to other countries around the world. So banking fraud has become America's biggest export in the last 2 or 3 years, if not the last 25 years.
Indeed, it would seem that way.
All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Coming up now from New York City, Matt Taibbi. He's an investigative journalist with Rolling Stone magazine. He's been blowing the roof off these scandals and doing a darn good job doing it. Matt Taibbi, welcome to the Keiser Report.
Thanks very much for having me on, Max. It's an honor.
Criminals typically use guns and Smith & Wessons and what have you, but we're talking about financial crimes, and they use the weapon of a naked short sale. And as have you reported brilliantly in your pieces, naked short selling was used to demolish Bear Stearns and Lehman Brothers. And you brought this naked short selling into the public sphere of information, which really needs to be talked about. And I want to just touch on it again today. Can you talk a little bit about naked short selling and how it was used to transfer trillions of wealth from the taxpayers to a handful of brokers and bankers.
Well, naked short selling, all it really is selling shares of stock that you don't have. In a normal short sale, which is a very beneficial legal process, what you do is you borrow stock from somebody, you go out and you sell it on the market, you wait for the shares in that stock to decline, then you go out and you buy back the stock at a lower price, and you return it to the people you borrowed it from originally, and you pocket the difference. That's normal short selling, and it's a very beneficial process that helps ferret out inefficient or corrupt companies. Naked short selling is when you go out and you sell shares of stock that you don't actually have, and then you never deliver them. And what's bad about naked short selling is that it floods the market with extra shares of stock, that shouldn't be there, and it just naturally devalues the stock. And that's what happened with Bear Stearns and Lehman Brothers. And you can tell this because when there's lots of naked short selling going on, there are lots of shares that are sold and then never delivered. And the amount of undelivered shares skyrocketed with both Bear and Lehman Brothers in the first weeks of those crises.
Okay, just to add some more detail to this, in a normal short sale, shares are borrowed and then sold, but these are shares that exist. They're already out there as part of the capitalization of a company. A company creates shares as part of its process of capitalizing itself, and a short seller will borrow shares and sell them in the hopes that they go down and buy stock at a lower price and make a profit. But in a naked short sale, we're seeing funds like hedge funds, etc., actually issue shares that were not issued by the company. They're actually, in effect, counterfeiting shares. Millions and millions of shares. These are not coming from the company. The funds themselves are issuing shares naked, quote unquote. They're counterfeiting, which naked is just a euphemism for counterfeiting. And then they're selling counterfeited shares as a way to crush the value of that stock. So this is a counterfeiting scheme. I mean, isn't that basically counterfeiting?
Yeah, all it is counterfeiting. I mean, it has a fancy name. They call it naked short selling, and there are even some people who intellectually defend it by saying it doesn't have any negative effect on the market because it'll just create an opportunity for somebody to buy the stock at an artificially lowered price. But that's really all it is counterfeiting. In the system we have currently, you don't actually have to deliver real shares of stock when you sell them to somebody. You can basically issue them an IOU instead. And when we flood the market with all these IOUs, I mean, these hedge funds and these investment banks are allowed basically to pass, these wooden nickels in place of the real thing. It just floods the market with all these phony shares, and it creates a valuation problem all the way across the board.
Let's talk about Hank Paulson for a second. He's the former CEO of Goldman. He's then the Treasury Secretary. What was his role in the Bear and Lehman collapse?
Well, in the Bear collapse, when Bear started to sort of wobble in the second week of March of 2008, there was somebody that stepped in on March 11th. That was the Tuesday of the second week in March, and bought a series of options to buy Bear stock at 30 within 9 days. And Bear at the time was trading at 62. And when Bear started to wobble that week, the Fed and the Treasury stepped in basically to negotiate a rescue with the J.P. Morgan Chase was going to acquire Bear Stearns to help save the company. But Hank Paulson that weekend was the one who basically said that the purchase price of Bear Stearns was going to be $2 a share. He did that over that weekend, thus guaranteeing that whoever made that crazy bet that Bear was going to lose at least half its value within 2 weeks was going to make an enormous profit. So he basically helped drive the price of Bear Stearns from 62 to 2 within the space of a week.
Right, so that's an important point here. In the options market, somebody made a bet against the price of this stock. They made a negative bet using options. They put up something like 1.7 million. You can correct me on the figures. But as a result of this naked short selling, as a result, 1.7 million, as a result of counterfeiting billions of shares. We're not talking about just a few shares. We're talking about billions of shares. the share price collapsed, and in 2 weeks, this $1.7 million was cashed out for something like $100 and something million dollars, correct?
Yeah, I think it was more like $270 million, something like that. Yeah, that was the profit on that transaction. But what's interesting is the timing. You know, somebody makes that options bet on the Tuesday. And it's literally that same day we start seeing massive quantities of undelivered shares in Bear Stearns. So clearly, you know, the two activities are tied together, and for a variety of reasons that are very hard to get into, the naked short selling is directly, tied to this activity in the options market because of a thing called the options market maker exemption.
Options market maker exemption is a rule supposedly to enhance liquidity in markets, but clearly that was abused as well. What's amazing is they're talking about a $270 million profit made from utter fraud and counterfeiting, and at the same time we hear in the news that 1 in 8 Americans are on food stamps. And this is money that could obviously offset 1 in 8 Americans being on food stamps. And as I said earlier on the show, instead of giving them food stamps, they should give them shares in Goldman Sachs stock.
It's a fantastic idea because really, you know, this was a crime that was perpetrated. What's unique about the Bear and Lehman stories, you know, naked short selling obviously has happened with smaller companies, and it's been a problem across the board for at least a decade. But this was a major event in American financial history that happened right under the noses of all the regulatory agencies. You know, the Fed and the Treasury were intimately involved in this entire episode, and they clearly saw what was going on here. But it was a you know, as you said, a case of criminal fraud that happened right under the nose of the government, and nothing happened, or there was never any consequences, for what went on. And this really was a signal to the rest of the world that the American capital markets are fundamentally corrupt. I think the fact that nothing was done in such an obvious case is really the consequential part of this whole episode, and that's exactly right what you were saying. That this is a fraud that the rest of the country should be compensated for.
Right. So Lloyd Blankfein, instead of doing God's work, as he likes to describe himself, he's actually causing millions of Americans to starve to death. Lloyd Blankfein is causing millions of Americans to starve to death. Is that a fair statement?
Well, yeah. I mean, I think one of the problems with a lot of these guys on Wall Street is that they see all the money that they're making as just kind of appearing magically, like out of the Keebler elf tree. They don't see it as coming from somebody else. They just see it as money that they're going out and farming, sort of from the general population, harvesting it like it's fish from the sea. But really, it's money that's coming from all of us eventually. Either directly through taxpayer bailouts or through some other way, through the devaluation of shares that belong to shareholders who don't know that their company is being naked shorted. In one way or the other, it comes out of the pockets of ordinary people. But a lot of these guys genuinely don't see that. They just see it as them making money, and that's their intellectual justification for what they're doing.
Matt, when I read your stuff, it reminds me of what Jeremy Scahill writes about the rise of Blackwater and the mercenary armies and the incredible crime and larceny and murders they're committing in the Middle East. When I read your stuff, I'm thinking, Matt Taibbi's writing about stuff on Wall Street, and it's a similar scale of fraud and crime and starving people. And you write in Rolling Stone magazine, which is, of course, read by folks all over America. It's, I guess you could say, part of the mainstream media, the popular press. How do you think this is going to play out? Is the mainstream media, is the popular press, are the people who read Rolling Stone magazine, is the penny going to drop at some point? Are they going to realize that this is on a scale of that we're seeing in war crimes? You said recently on another program that there could possibly be a Nuremberg-like trial for these criminals, which I agree. I think that's an excellent point. Is that where we're headed, a Nuremberg-like trial with Hank Paulson and his gang on trial?
Well, I think there should be something like that, but what the problem is that historically, not only has there never been a situation where the government is swept in and sort of instituted massive wide-scale prosecutions after economic crimes. They've done exactly the opposite. Their history is to flood Wall Street with money by slashing the funds rate, the Fed slashing the funds rate, and then instituting bailouts when necessary. I mean, if you go back 20 years, every time something terrible happens in the markets, the response is just to give these guys a whole ton of money. The Mexican peso crisis, long-term capital management, the tech bubble, the housing bubble, everything that went on last year. There haven't been any sort of wide-scale government criminal prosecutions after any of these messes, and it's beginning to look like we're not going to get it this time. But that's really what's needed, because a lot of what the problem here is really a psychological problem on Wall Street. It's really because they know, a lot of these people know that at the end of the day, they're not only are there going to be no consequences for taking enormous risks, but that they're probably going to be bailed out by the government if something goes terribly wrong. That sort of psychological reality has bled into the entire mindset of Wall Street, and so they're continually amping up their risk profiles in search of short-term profits, and that's really, we have to break that cycle by A, not giving bailouts, and B, prosecuting people who commit fraud.
So they're financial mercenaries operating completely outside of the law.
Yeah, no, I mean, I actually covered some of that same stuff in Iraq. I mean, I remember, exactly the stuff that Jeremy Scahill was talking about. Companies like Halliburton running phantom deliveries of fuel across the desert, so that they called it delivering sailboat fuel, so that they could charge the government enormous fees for their services. And that's exactly the kind of stuff that's going on Wall Street. Really, the financial services sector has really become like a second Pentagon, in the sense that it's a gigantic mechanism for sucking up state largesse and taking money out of the pockets of taxpayers and delivering it to people who already have more money than they could ever use.
Matt Taibbi, thank you for being on the Keiser Report.
Thanks very much for having me, Max.
I want to thank my other special guest, Keiser Report correspondent Stacy Herbert, and I want to thank you for watching. If you want to send me an email, just send it to this address, keiserreport@rttv.ru. That's keiserreport@rttv.ru. Until next week, this is Max Keiser saying, bye, y'all.